Hallo und welcome back to another market closing live stream. Oh, today we have 29 minutes to go to the bell and we have earnings. Yes, we have earnings today. We have Facebook today. Oh, we got Qualcomm today. Oh, this is good. Oh, yes. Okay. I didn't even realize that until just now. The reason Qualcomm is so good is because I believe that CEO is not going to give us bullcrap. If they're having supply issues as one of the major 5G plays, cellular device manufacturer for 4 and 5G, and of course many other chips, including even autonomous vehicle products, I think that Qualcomm is going to give it to us straight. I don't think they're going to pull a Google where they just choose not to talk about Q1 2022. I don't think they're going to pull an AMD where they're like, well, we're well positioned, we're good. And I don't think they're going to pull an Apple where they're like, yeah, we're facing significant supply issues, but it's a little better than it was last quarter. I actually think Qualcomm has a good chance of giving it to us straight. And if Qualcomm comes out and tells us during their earnings call, like, hey, things are getting better, that's going to be really good. And so I'm optimistic for that. I'm not playing earnings today, though we do know that Matterport is reporting, Facebook's reporting, Spotify's reporting, Qualcomm, and along with a few others here. Ooh, Netgear. That could be another interesting one to look at. Netgear. I'm really Allstate insurances. Okay, that could be interesting. Allstate might actually have commentary about replacement cars in the car market, so that could be kind of interesting. Also, maybe a little bit of real estate commentary. Who knows about construction and contracting? Sometimes you get that out of the insurance companies. So I think that could be quite interesting. Yeah, somebody wants to know if I think Matterport will beat. I got to do a thumbnail. I don't like to play earnings because they're freaking nuts, but they're so unpredictable. But the search trends for Matterport have not been very positive. And you have to remember that we're going through a transition right now with Matterport, and that is a transition from product sales to services, which is servicing people who are doing the 3D scans and that. But the product sales and revenue for the product sales are going down, so which is somewhat unfortunate. But anyway, yeah, so these earnings are going to be really interesting today. And I'm very excited about these, specifically because of the potential for big insights into supply chain issues. Now, so far, honestly, we've had nothing but garbage and trash from FUD from these earnings calls. And I hate to say that because I don't want people to think that like, oh, well, it's every time Kevin reads an earnings call, it's bad. It's like, well, I'm just gonna read you what the facts are. If you don't like it, just don't watch it. But look at this: GE, 3M, General Motors, Kimberly-Clark, Caterpillar, McDonald's, Starbucks, Apple, PayPal, even the shipping company. All of them are complaining that things got worse in January and not better. So it's not a good trend, but Qualcomm will be a good indicator, I think, for us. So we'll see what happens with Qualcomm. Let's do a quick check of the markets, and then let's see what kind of news we can get out there. So first things first, let's look at our indices and Tesla over here. I do want to point out Tesla specifically because it usually when we see this kind of channeling here in Tesla, it can set itself up for a breakout either to the upside or the downside. But this is a clear volume reduction consolidation here, and that could set itself up for hopefully a rally right into the close. And again, I know there are people like, oh, Kevin, why would you say hopefully it goes up when you're not in it? Again, I don't want there to be a recession. I want good news. Best thing that could happen for all of us is all the supply chain issues U-turn. I buy back into Tesla $50 more expensive than where I sold it. I pay my taxes. Who cares? And the economy doesn't go into a recession. That's the best case scenario. Unfortunately, the calculus that we're using and the models that we're using suggest that there is a higher expected value given the opportunities that could present themselves or are already presenting themselves for us, whether that's in business creation or in stocks or in real estate. There's a higher expected value in having cash than there is in actually being in. That's not a suggestion for you, though. In fact, in the course member live stream just a little bit ago, we were talking about exactly for what kind of person the macroeconomic cycle actually matters to. And there are very big differences because the macroeconomic cycle does not matter to everyone. Not everybody's going to be able to take advantage of it. If there is a actual larger business cycle shift. But anyway, so Google, very interestingly here, never hit the levels that we really saw in pre-market. This is not really surprising. If we go out to the 30-minute here, it is very, very common for retail to push these stocks to extremes in the pre or post market, and then for them to go back to some sort of current normal level. And I only say that as a caution because the same thing happened with AMD. So, people who are up at 1 a.m. who are like, YOLO into AMD, and things going up like 11, 12%, I would just be careful about that. Now, don't get me wrong. I think they deserve to go up. Even to potentially 10%. I think it's totally worth it because the company killed it. I thought they did really well. I do think that Lisa, the CEO, was very evasive about Q1. And I don't like that. I wish they would just give us clarity on Q1. Like, why? Everybody wants to know what's going on in Q1. EA is recovering really nicely, but that's after the crap earnings that they had. And the day chart actually doesn't even really signify that as badly. Well, if you consider the wicks. But anywho, so Outlet is another one of those. Look at the 30-minute on Outlet. I mean, this thing ran substantially this morning. I think it was up like 10% or something at one point this morning. So be careful about those little momentum movers. Facebook is going to be very interesting for the close here. This close is going to be spectacular. We do have the S&P at highs of the day, which is quite incredible. The S&P out of everything is actually one that's revisiting what we had in the pre-market. We had about these levels in the pre-market here, and we're really struggling to get above that 61.8 on the Fibonacci here. This is now the second time that we're knocking on that door, but it certainly doesn't hurt that Apple, Google, and Microsoft are all green, right? It's going to be something that weights this up, especially when you look at like Delta or Carnival. These things aren't really moving today. JP Morgan, Amazon, they're moving down today. Starbucks, surprisingly, was only down 1%. But folks, look at some of the pain that we've got here. I mean, PayPal down 24%. I mean, PayPal basically went as far as telling us that everybody who got a stimmy check made a PayPal account, got their stimmy, spent money on stuff, and then never went back to their PayPal account. That's basically what they said, which is quite wild. Quite wild. Somebody says FedEx's PEG ratio is under 1. There are a lot of companies that have a PEG under 1 right now. I don't know if that's entirely true for FedEx. I'm happy to fact check that though, because you could be correct. It'll just take me a minute to do that. And so we'll look. And now, just because something does have a PEG under 1 doesn't necessarily guarantee it's a great deal. Because, see, one of the things that happens is if you end up pricing in recessionary pains, which our market is nowhere even close to pricing in recessionary pains. Like this market is barely pricing in my opinion, a 0.25% rate increase. And it's very, very optimistic in my opinion right now. But that's okay. S&P is like basically within 3.5% of all-time highs or something crazy. Maybe like 4.5%, somewhere in between there. But anyway, if you had any bear market or recessionary dynamics that needed to start getting priced into valuations, then PEG ratio is the first thing that's going to go right out the window, because your forward estimates could still on paper be high, but those are all going to get substantially cut, for a couple of years in the event of some form of a recession. Somebody here says, I bet people are still using Cash App. Yeah, maybe. I mean, PayPal certainly wasn't an enthusiast, like something that was motivating to say that would certainly be the case. This is interesting. Yeah, Spanish John, I agree with you. Spanish John here says, a 0.25% rate increase won't do anything to inflation, which is 15% in reality, and the market knows that. Yeah, the Fed is being really cautious here. They do not want to repeat the 2018 mistake, which was over tightening, and they U-turned very quickly on that. But who knows? How bad are they going to let it get then? Or is it just going to go away alone? That's the best case scenario is that like a company like Qualcomm comes out today and says, hey, things are getting better. Those are the sorts of catalysts that I'm looking for. Boycott PayPal campaign. I didn't hear about that one. Maybe it was under the rock for that one. Visa did better than PayPal. Sounds more like a problem with PayPal. Possibly. But one of the reasons PayPal blamed their decline was because of more of a return to stores, and that could help. That could help Visa a lot, right? Do you have any idea how much adoption activity Zelle is being used compared to the Cash App? Ooh, that's a good question. That's something we could probably look up as well with the JPM earnings call. Or not necessarily their earnings call, but probably just their annual report. So if they even disclose that stuff. Okay, so growth rate. See, FedEx's growth rate plummets, and that's one of the issues. You probably have an average growth rate of about, current estimates on the street are maybe 20% for 2021, but 10% to 11% in 2022, and then you go down to like 4.5% for the next 3 years thereafter. So if I were to average that, I don't know, what is that? It's probably like 6% average growth, right? You've got EPS for 21 of $18 divided by 250-ish about. So 250 divided by 18 gives you about a 13.8 times price to earnings multiple, right? But if their growth rate is an average of 6, well, now all of a sudden your PEG ratio is actually 2.3. If you're using the growth rate from 2021 and you're dividing by 19%, well, yeah, now it looks like the PEG ratio is 0.73, right? So that's a little bit of a potential risk factor there. And keep that in mind when you're looking at, financial analysis. It's all dependent on the forecast. And if the forecast is wrong, or something potentially changes to modify that forecast, any spreadsheet you make goes straight out the window, which is quite unfortunate. But that's what makes stocks hard. Another thing that just drives people nuts, but it's a sign of the mega caps holding the market up, is just how well the indices continue to do, like the S&P or QQQ, the NASDAQ, relative to individual stocks that can be very, very hot. Now, I do think that this is where you get your alpha, right? Seeking alpha, right? This is your above market risk adjusted return. Don't worry if that doesn't make any sense at all. You get good deal. Look at this. There's a substantial amount of pain over here. You got PayPal down 24.5%. You've got some of the momentum movers that were coming back to life, like Affirm, Arrival, and I know Affirm had some momentum. I do think it's below now fundamentals, but at one point when it ran to like that 170, that was insane. The 120 to 170 sprint was just pure momentum, but the 120 to 60 is just unfortunate. That's what that is. But anyway, there's some serious pain here. Look at this. You're talking about all of these here, 9 to 12%. Shopify, 9.9% here. Etsy, 9.9%. Basically everything that was hot in COVID, the SPACs, the online retail. Look at Wayfair. Wayfair's down more than 50% from all-time highs. It's insane. Just absolutely insane. Smile Direct has had some momentum. So is Arrival. Everybody's been like retweeting all the tweets in the world about, oh yay, Arrival's going back up. Okay. And then it just takes a day like today to ruin the last 2 days. At least it's above the 2.9 where it was, but still, this is just quite depressing. And this does not help us affirm, not to make a pun here, but it doesn't really help us affirm that the market is escaping these lows that we've seen. And look at this Matterport, $8.76. That used to be a joke. People are like, oh, how low can Matterport go, Kevin? I don't know, $8, and it could, if things really hit the fan. And that's like, oh, crap, here it is. SoFi, just another one. I mean, come on, seriously, $12 and 22 cents. Whatever. Okay. Anything SPAC related is just rubber banding back to $10, with the exception, of course, of DWAC. But then again, DWAC is just, you've got MAGA hodl. That's what I call it, the MAGA hodl. Not that there's anything wrong with the MAGA hodl, just it's quite a powerful hodl. What is the thing doing right now? Wasn't it like $80? Oh my gosh, it's $79.99. No, Kevin, it's not $80. It's on sale. It's $79.99. That's too funny. Anyway, obviously the indices today are getting propped by Google, so also do keep that in mind. For a $2 trillion company, what's up, Lola? For a $2 trillion company to move 7.7%, you're talking about an insane movement. So it's important to keep that in mind, but it's quite wild. So people in Texas are freaking out about the snowpocalypse. The last thing we need is another storm, because that created a disaster last year. Last year we had those storms in Texas in February, and it was terrible. I mean, companies were, pun, under the weather for quite a while thereafter. Oh, wow. The Dallas Observer. You're not wrong. Look at this. Groundhog Day. When is Groundhog Day anyway? Okay, come on. Oh my gosh. There we go. There we go. Groundhog Day. Today's Groundhog Day? Hey, everyone, it's Groundhog Day. All right. So North Texas temperatures to plunge as grid struggles to keep up. Are you serious? Here we go again. There's been a long-running joke about weather in the Lone Star State that you've probably heard your dad whip out during the lulls in small talk. If you don't like the weather in Texas, wait 5 minutes. Okay. Wow. Snowpocalypse 2.0 could be upon us. Sleet, ice, and snow is set to hit parts of North Texas on Wednesday. Well, is it? Weather, Dallas, Texas. No, right now it looks like rain. Oh my gosh! There it is. Look at that. You got snow coming tomorrow. That's insane. Yeah, look at that. Winter storm warning. Dallas, Fort Worth. That's not good. This was, by the way, this was terrible for the insurance companies. Weather FUD. Oh, it's just FUD. Oh, man, that's a good one. But anyway, this was horrible for supply chains. It was horrible because you've got a lot of manufacturers out in Texas. It was horrible for energy prices. It was horrible for insurance companies like Hippo. Hippo got whacked. Okay, Hippo got destroyed because of Texas and the winter storm last year. Like, they have a ton of their policies. I can't remember what percentage it was. I made a video about Hippo and it was high. And one of the reasons what I liked about Hippo was that they were diversifying away from Texas. But I also didn't think that we were going to see another snowstorm the very next year, potentially. I'm not in Hippo right now, but you already know that. Anyway, yeah, that's wild. That is wild. Okay, so that's Dallas. What about Austin? I mean, that's not in the north. Oh my gosh. Freezing rain is scheduled for tomorrow in Austin. That's it. Cybertruck's delayed. Major airlines issue travel advisory for Austin. Wow. Okay. What's another one? Austin, Dallas, Houston. Oh, okay. So it's A high of 70 degrees today, but then on Friday it's supposed to be 39. What are you all freaking doing in Texas? Oh my gosh, that's insane. You live 10 minutes away from the Gigafactory. Oh, that's awesome. Wow. All right. Well, hopefully it doesn't do anything. It's looks like it's only, like somebody says here in the comments, a day-long event. So hopefully it's not as long as what it was last year. Anyway, it does look like, what's its name here? PayPal is rising into the close a little. Look at that. You got a little bit of buy the dip happening here on PayPal. Went to a low of 129 up to about 134 right now. A nice little run here into the close. I wonder if that's extending. Oh my gosh. Did somebody pre-leak Qualcomm or something? Or no? Qualcomm's just up 6% going into earnings, probably because of the AMD enthusiasm. It's probably not a terrible bet, depending on what the guidance is. How about Tesla? Are we getting a little run here too? Nope. Tesla's down about 3%. At least until you get to Houston with sustained lows, kind of like the market. Oh, no. Thank you. Enphase down a couple percent today. Trade Desk goes negative for the day. So does Cloudflare, going negative for the day. Oh, this is wild. Dutch Bros going negative. I thought they were green earlier. No, I don't know that they were today. Redfin 4.3% to the downside. DocuSign 4.3% to the downside. ARC down 5.27%. And LSID is down almost 8%. Not really moving into the closing here. Shift Technologies down 10%. Affirm's getting whacked. Etsy's getting whacked. Upstart's getting whacked. Arrivals 950. That used to be my area code. Matterport, nothing before earnings. SoFi, nothing. DraftKings falling into the close. This is just garbage. Let's put it that way. I wonder if this PayPal little micro rally here is actually going to go anywhere. We'll keep an eye on this. But it did look like you had a little bit of volume increase. You know what, folks? I bet you that was Kathy. That's Kathy's coming in, buying the dip. Okay, later, y'all have homework. You're going to see what Kathy bought today. And let's see if it's PayPal. You know, she's got ARC-F. Today would be the day for ARC-F to go shopping. Just saying. Probably Kathy. Kind of weird, but it is also a small world. 950. Of course. That's what we used to say. All right. Somebody doesn't think she bought PayPal. All right, fine. Oh, all right. Let's look at some news before we get in here. And let me quickly see what the suits are saying too. Probably bought Square. Oh yeah, what's Square doing really quick? Square's down. It's not as bad as it was. 7.9. You know it's a bad day when you're literally saying, oh, Square's not down that much. It's only down 7.9%. My God. Okay, leap above bearish trend line could unlock more stock gains. Yes, if we can break our trend lines, but we have not yet. Not all tech stocks are created equal. True. Okay. This is an interesting title. So the title is Inflation Easing? Not yet. The rent is still too damn high. The rent is too damn high was a political slogan adopted by a New York City resident and became the founder of the party Rent is Too Damn High. It's the Rent is Too Damn High party. Okay. Yeah. Home rentals, which account for 1/3 of CPI, are on pace to potentially threaten the Fed's ability to control both inflation and the pace of rate hikes. Duh. Like, people are worried about used cars. You should be worried about rents. As damaging to the inflation physique of consumers as high energy and grocery prices, they pale in comparison to how high shelter costs affect consumer spending patterns. Last November, the New York Fed Consumer Survey showed Americans expected rents to raise 10.1% over the next year, the highest reading ever on record. If a component that makes up such a large part of CPI gets out of control alone, like housing, the Fed will have to respond. That's not a pleasant prospect for most risk assets, fixed income in particular. Bonds, aka. Yikes. Hashtag gentrification is too prevalent. Too damn prevalent. You remember an SNL skit on the Rent a Student? Yeah. Yeah, getting you see these little runs into the close, which has been a lot more bullish than the collapses into the close we've seen in a lot of December. Yeah, you are getting, like, even Tesla, some of the candle, it's still down 3% on Tesla, but you're actually Tesla advanced down. Tesla, oh no, this isn't, there's not Tesla. Where is it? Where's Tesla? Oh, there we go. It's down 2.6. Okay, there we go. That's a little better. So we got a little bit more green here. Yeah, Shift Technology is not participating at all. PayPal stopped moving up. Square's moving down. See, this is what happens, folks. You get these little runs, and then you hit these numbers, and then you start hitting people's limits, and then they're able to start selling off. Yeah, Google's not moving. Google's actually falling a little bit into the close. ARK is rising a smidgen. Apple's up a tiny little bit. I do wonder what's moving the SPY. Oh, it's trying to break. That's nice. Trying to. I don't know if it actually will close above. We'll see. Anywho, let me see what other potential headlines we have. We don't have a lot of time, and then we have to do earnings. Bridgewater executive says commodities are the most underused inflation hedge. Ooh. Mark Zuckerberg turns to think tanks to sell the metaverse. Yeah, we gotta convince those people to like the metaverse. Hurry. Gather everyone around. Start thinking. All right. Anyway, 2 minutes to go to the close. Do have substantial sets of earnings today. It's like there was a CNBC article that got posted 9 minutes ago about PayPal, saying PayPal's future prospects make it a buy, basically. Oh, I wonder if it's another Jim Cramer pump. Because, yeah, it makes sense. About 9 minutes ago, the thing started running a little bit. That's hilarious. Look at that. This was not a Kathy. This was a Jim Cramer pump right there, which has immediately been dumped. That's terrible. Sorry. But it's true. Look at the chart. That pump did not last long. Yeah. All right, folks. We got earnings. We got big earnings. Honestly, the most important thing that, if you're going to do anything today, that you should pay attention to is Qualcomm. The most critical set of earnings, in my opinion, for inflation expectations. I think Facebook's going to talk up all their advertising from the holiday, but I don't really care. I want to know what's happening in this quarter, the forecast, which Google was so rude and didn't provide us. Oh my gosh. Okay. And then we do have Matterport too, right? Yeah. Who am I missing? Allstate, Qualcomm, Facebook, Spotify, Matterport, if I didn't say that yet. For earnings, those are the ones that we got. So Qualcomm, Meta, Spot, MTTR, and Allstate earnings. Now. There. Thank you. Oh, is Matterport next week? Seriously? I somebody told me it was today. Maybe I was wrong. All right, anyway, let's get in here.
Those small cap stocks are tracking to actually be negative on the day, so it's another one of those top-heavy sessions.
The Nasdaq is now up 4.7% for this week. Welcome to the closing bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. Investors now set for another huge hour of earnings. We'll have instant.
Yeah, I don't know. Maybe somebody can fact check me on T-Mobile today on whether or not Matterport is today or not. But anyway, yeah. Okay, great. I missed my indice readout. Well, fine then. I'll do this. Okay, Dow up 0.63, S&P up 0.94, a little shy of that full 1%, and NASDAQ up 0.15, with the Russell actually down 1%. That's interesting. Okay, let's see what we got for Qualcomm. That's the big one. I'm really excited for Qualcomm. And then, of course, we've got Facebook coming up as well. And somebody else saying Matterport is today. Okay, well, Spotify's out. Spotify miss. Q1 monthly active users, 418 mil versus 422 estimate. Spotify drops 12% after the monthly active users misses. Holy crap. Spotify Q4 gross margin 26%, 26.5%. Premium revenue up 22%. Oh my gosh, that's terrible. 12% that fast? Dude, I couldn't even read it that fast. It already fell 12%. That was pre-programmed then. Premium, let's see here. Monthly active users, total premium subscribers, 180 mil, slight miss from the 180.2 expected. No longer plan. Oh, Spotify says it no longer plans to issue annual guidance. Dude, what is it with these freaking companies not wanting to provide guidance? Oh, Qualcomm beat. Forecast good. Forecast is good. Demand is accelerating. Forecast is good. Wishes he had more supply to meet demand. Strong demand from Android makers. Google said the same thing. That is a beat. It's a beat with an adjusted EPS of $3.23 versus the estimate of $3. Forecast coming in at 10.2 to 11 billion. That is a midpoint of 10.6 billion, which is almost $1 billion more than expected. Holy crap. That's really good. That's a really good boost on Qualcomm, but they wish they had more supply to meet demand. Wow. Okay. So a disaster on Spotify with a monthly active users miss. But in terms of demand on these chips, more. Just more and more and more. This is crazy. Okay, there you go. This is good news. Chip supply improving. Good. Really good. That's what we want to hear. Finally. Oh my gosh, I can't wait to read this. This is huge. Let me get, okay, hold on. It only gains 2% in after hours? Come on, man. No, this is good. This is so good. Qualcomm. How is it only up 1%? It is literally forecasting $1 billion more. And they're talking about potentially chip supply improving. And here goes Spotify down 16% now. You got to be freaking kidding me. Holy crap. Now, just because chip supply goes up doesn't mean we don't have inflation anymore. That's just the beginning. And so I want to hear them quantify this. But that is a start to good news. I'm happy about that. I'm going to pull up some more data about that. But that's really good about Qualcomm. Spotify's just getting wrecked. Spotify loss per share was 21 cents versus the 43-cent estimate, but that user miss was bad. Spotify projects slow start to year after COVID uncertainty. Wow. Okay. Quite odd. Still waiting for Meta. Smartphone chip sales are what's taking off, which is kind of what we saw at Apple too. The adjusted EPS at Qualcomm came in at 323 versus that 3 we expected. Talked about that already. Wow. RIP Spotify. Yeah, no, this one's getting busted. Licensing revenue forecast slightly short of consensus, but most of the Q2 guidance beats the Wall Street estimates for Qualcomm. Let me see if I could look up their press release. Yeah, I can. All right, we're going to keep an eye on that. We're going to keep an eye on Meta and Matterport right now. Those are the next ones, and Allstate. Meta's just getting absolutely reamed, but this Qualcomm is good. Investor relations. I can't believe they have $1 billion more in the forecast. So let me see here. Earnings webcast or presentation. Let me look at their presentation, and I'm going to look for supply. Dude. They didn't mention the word supply once? Oh, it's pictures. No, it has to be searchable. You idiots. their stupid presentation is not a searchable PDF document. How dumb is that? Wait, now y'all are saying that Qualcomm's going down? Okay, Spotify's down like 16.6%. And QCOM, why? Dude, Qualcomm crushed it. How's it going down? They beat by $1 billion in forecast. They're saying good things about supply chains. How could this go down? That is nuts. This is their sheet here. I'm just gonna do a really quick look here. I'm just trying to find anything that I can find. You see, here's their automotive section, which people forget that they have. Anything about supply. This is all Qualcomm here. Key announcements. Snapdragon chip, video conferencing, great. Oh, I love the look of this. Look at how sexy this looks. Oh, man. Oh, I love this. Now, that looks very lucid-like. Look how they're going for even bigger screen, like full dash screen now. Oh, that looks juicy. Oh, I want that. Tesla, take note. Oh, Meta platform slumps 16%. Oh, what? Oh, their Q1 guidance is scheisse. Not good. Oh, their Q1 guidance is terrible. Their midpoint is 28 billion for the Q1 guidance. Their estimate was 30.25. Holy crap. Bad. Why? Q4 EPS, $3.64. Monthly active users, miss on the monthly active users, 1.93 billion. The estimate was 1.95 for daily active users. Monthly active users was 2.91. The estimate was 2.95. That is a miss on the daily and monthly active users for Facebook. The revenue coming in at 33.67 billion. So revenue actually beat, but bottom line EPS missed. Bottom line comes in at $3.67 versus $3.84. Meta sees headwinds from increased competition for time. Whoa. Oh my gosh. Meta sees growth negatively impacted by Apple iOS changes. Wow, I thought they had fixed those. Oh, that's not good. Listen to this one. Facebook is hearing from advertisers that costs are impacting budgets. Oh, I wonder if that's why Google is not giving guidance, because people are cutting advertising. Remember what I said about my ad revenue on this channel? My ad revenue usually declines 15% from December to January. It declined 30% going into January. That makes sense. Pinterest, Snapchat falling along with Facebook right now. It is a miss of GAAP EPS by 16 cents. Weaker than expected earnings here. Impacted by headwinds on inflation. So let's see. Impacted by, price growth. That's not good. Wow. Okay, I still want to go through the details here on what Qualcomm says about supply. But it's all, what the hell? Look at Qualcomm. Qualcomm's forecast beat by $1 billion and it's down 7%. Are you kidding me? How do you beat by $1 billion on forecasted EPS and say that supply chains are getting better and drop off the cliff by 7%? How do you pull that off? What happened? Google's dropping 1% now. Nvidia's dropping 2%. We've got this is a disaster. Why? Oh my gosh, Spotify's down 22%. Snapchat's down 14%. Facebook 18%. Qualcomm now down 8.4%. Twitter 9.6% to the downside. Pinterest 8.4%. Trade Desk, after running yesterday on good news because of Google, drops 5.6%. Roku 3.4%. Amazon 2.6%. Shopify is down 2.69. ARK is down 2.3. Matterport's down 3. I don't even know why Matterport's in this. Holy crap. Matterport hasn't even reported yet. Matterport's just like, yo, where's the party? Like, not the party you want to be a part of, but the party you're part of. Jeez. What happened at Qualcomm? Qualcomm's adjusted Q2 EPS, their forecast is better than expected. I don't get it. Let me look at their 10. This is stupid. Let me look at their 10Q because this is absolutely ridiculous. Qualcomm Investor Relations. Why? It makes zero sense. Qualcomm financial information, SEC filings, 10Q released today. Thank you very much. Let's drop that into my document processor and let's search supply together here because this doesn't make sense. I'm not even going to wait for the earnings call. This is such a cluster F. We got to do this right now. Risk factors. No. Come on. No. Come on. Where is it? Fiscal overview. First quarter. Automotive. No, this is about an acquisition. Okay, here. This is management discussion. Supply. No, this is just an outline. This is also bullcrap. Give me the freaking stuff. What is going on? While we and the semiconductor industry continue to experience capacity constraints, we have entered into several, and we expect to enter into additional multi-year capacity purchase commitments with certain suppliers of our integrated purchase products in an effort to secure commitments for future supply, which we expect will allow us to continue to realize benefits from increased demand for integrated products, especially Chinese OEMs. Despite these realized benefits, there continues to be supply chain complexities and challenges that have prevented, and we expect will continue to prevent, us from securing supply and fully realizing the benefits of increased demand. That's the headline was bullshit again. God, this, I'm telling you, like, we were just talking about this in the course member live stream, that mainstream media is like trying to make everything feel like it's okay. It's not okay. It's not okay. Mainstream media knows that the retail people just want to hear we're going to the moon and then everything's fine. And then they get more views. You know, everybody's talking about Tom Lee because he goes on CNBC every 3 days and says everything's great. Come on, man. Does Tom Lee pick up a single 10Q? Man. Anyway. Okay, so what do we have here? Okay, COVID, supply chain, we know that. We are unable to predict the extent to which the pandemic will impact our suppliers. Fine. Multi-year supply chip agreement with Apple and began shipping modems. In December, Apple acquired Intel's modem assets and is developing its own modems. Accordingly, Apple is expected to use its own modem products rather than our products for summer future. In addition, supply chain constraints within the semiconductor industry may further incentivize our integrated circuit customers to vertically integrate. Oh, this is bad. That's actually bad right there. That's not good. They're basically saying the people who are buying chips from Qualcomm might want to vertically integrate and make their own chips because these supply chains are such trash. And it's not better. Similar. Okay, this is another risk factor. This is automotive industry is subject to long supply or design timeframes. Okay, more risks related to supply. Okay, this is more generic. This is like attorney legalese. This might be better. No, this is also more. Okay, here. Currently, the global supply semiconductor industry. See, this is where the money is, folks. You got to read this stuff. Currently, the global semiconductor industry is experiencing demand for integrated circuits that exceeds our industry capacity to meet demand. Our ability to meet increased demand for our products has been and may continue to be limited due to the inability to obtain additional manufacturing. Okay, yeah, this is still a little bit more attorney legalese. I liked it a little bit more, the management comment earlier, because it was a little bit more human and probably accurate, because this just seems like they're covering the worst case scenario. Yeah, this is climate change concerns. Okay, got it. Cyber, yeah, this is just more risk factor crap. But that management comment earlier was important. A lot of talk about supply in this. Okay, so the most important parts, specifically this, capacity constraints. Yeah, well, we already talked about this. So if you care where this is page 26 of their doc. Oh man, what the? Okay, how is the dust settling? It can't be that bad. It can't be that bad. Let's look. Oh my gosh, Facebook's now down 18%. Spotify still down 19. Snapchat down 6.6. This is after hours. Qualcomm still down 8%. Dude, Trade Desk is now down 8%. Come on, man. Matterport down another 4.5. There goes Affirm down 3% in the after hours. Tomorrow's gonna suck unless this crap U-turns. Holy smokes. What's the SPY doing in the after hours? Down about 0.2%. And you got QQQ down down about 1.53%. You know what? I have to just quickly tell you that this video is brought to you by today. It's brought to you by Extra, which, quick note, and then we're going to go back to reading what the suits are saying, okay? If you want to build your credit without potentially going into debt, go to metkevin.com/extra. Basically, it's kind of cool. They give you this debit card, which you can hook up with your existing bank accounts. You don't actually have to make a new account. And you spend money on this as if it was a debit card. And then they lend you the money for a day for free and then pay themselves back from their account. And they report it to your credit bureaus as if you paid it off. This is like the sickest innovation ever. Like if I could ever come up with a fintech product, it would be this. But it's too late because Extra already did it. metkevin.com/extra. Learn more about them. But really, really good job, Extra. Seriously, I think that is so cool. Okay. Jeez, man. All right, we're going to go back to the suits here in just a sec. Quickly going to look at BTC. Of course, with BTC, we're going to look at FTX US, which you could also sign up for by going to metkevin.com/FTX US. But anyway, look at this. We're down at 37.4. We just can't stay above 38 on this one, which is really freaking annoying. Okay, T-Mobile actually did decently, it looks like, on earnings. Let me pull the T-Mobile earnings because at this point, we need some good news. Allstate is still not out. Let me pull T-Mobile really quick, which I think is T-Mus. It is T-Mus. Okay, so T-Mobile, okay, somebody is now telling me that Trade Desk is down 10%. I'm about to vomit. That's ridiculous. It's not good, the advertising stuff. Like I said, I was nervous about advertising because of my YouTube. What I personally saw. Okay, T-Mobile. T-Mobile comes in with 34 cents per share. It's a beat on postpaid phone revenues. They came in with 48.03 bill. My gosh, really? They make that much money? Oh, no. This is average revenue per user. I'm sorry. Yeah, it didn't make sense. For $48.03 per user as opposed to the estimate of $47.39 per user. That makes a lot more sense. I don't invest in the mobile companies. I'm sorry. So I'm trying my best. They had more users added than previously expected. 1.75 versus 1.6 expected. They are expanding CapEx more than expected, up about 5% in after hours. Their sales did miss a little bit. 20.79 versus 21.09. But the EPS was a big beat, 34 cent versus 18 cent expected. I mean, that's almost double on the EPS. But their EBITDA forecast missed. So kind of like, I would call this a little bit more mixed. It doesn't seem very clear here on T-Mus, but let's go ahead and look at this one. Oh yeah, there you go. So T-Mus having a little bit of fun. Keep in mind, these guys though, they're becoming a little bit of a flight to safety for some folks. Because they pay the dividends. At least AT&T does. Although, I mean, not a good flight to safety. It's been the last 6 months, given that it's gone from 145 to $108. But still, some people are seeing them as like dividend plays and therefore maybe safer. I don't know. I don't know about that. Dude, Facebook is now down 20.5%. This is an absolute cluster F. Hold on. Let me see what else is going on here. Okay. That's just so bad. It is so bad for what they're saying about consumers. At the same time as inflation is high, it's freaking terrible. Yep. Facebook parent company Meta stock plummets on warning of Q1 slowdown. Users stall. Forecast falls short. Oh, man. They're launching some kind of metaverse punk, whatever. Let's see if I can get a little more detail. And we know the Qualcomm good news was clickbait because we actually went into it. Okay, here anticipates modestly increasing ad targeting and measurement headwinds from platform and regulatory changes. In other words, again, blaming Apple. I really got to figure out what is going on with Facebook, though, because that's your consumer. Like, if I'm going to run ads somewhere, it's going to be on Facebook. Now, don't get me wrong, Google is good too, but usually Facebook has been the place to go. Facebook owner Meta takes big share hit as it warns inflation impact ahead. Are you serious? I got to see this myself. Hold on. Investor, we'll pull it up together. I'll show you in just a second here. That's not good. Let's just go straight to the 10Q like we did with Qualcomm, because all the stupid earnings presentations are just clickbait. Like, just go to the actual what they're telling the SEC. That's where you got to go. All right. Oh man. Maybe they'll recover a little bit in the earnings calls, though. I mean, if they say something good, I suppose. All right. Let's see what they say about inflation. Matterport. Yeah, did we get Matterport yet? No. Maybe they don't report today. I don't know. Well, hold on. If I go to EVTS, it should show up. Events calendar for Matterport. MTTR. I can't for some reason get it. Whatever. Okay, so I gotta focus on this. So there's only one mention of inflation? What? We are exposed to market risks. No. How do you only mention inflation once in here? Then where did that article say that Meta talked about inflation pressures? Well, let me look at it. Sky News. Where did they say inflation? I mean, maybe it's prices. I can look at prices. But here. Facebook's parent company Meta has endured big hits to its share price after disappointing on several measures, blah, 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 blah. Okay, the company, which includes Instagram in its stable of social media, said it has been informed by advertisers that surging inflation and supply chain disruption were damaging budgets. Whoa. No way. Okay, I'm just going to search the word prices. So prices, we actually have a bunch of results for. So, okay, this is Irs Liabilities. What's here? What do we have here? Oh, while we experienced a reduction in demand and related decline in pricing during the onset of the pandemic, we believe the pandemic subsequently contributed to an acceleration of growth. Okay, good. Of online commerce, particularly during the second half of 2020. More recently, we have experienced, more recently, we believe this growth has moderated in many regions, which to some extent adversely affected advertising revenue growth in the third quarter of 2021. Okay. We may experience reduced advertising demand and related declines in pricing in future periods to the extent the effects of the pandemic subside, which could adversely affect our advertising revenue. Do I have the right document here? Is this the last quarter? Hold on. Oh, idiot. This is the last quarter. Hold on. I'm like, they're reading this like they're going through history here. This was the most recent one on their website. Come on, man. I mean, you can't blame me. It's literally the most recent one here, but it does say October. Come on, folks. Don't do this to me. Come on. Give me what I want. Let me try again. Earnings slides. Oh, yeah, it's because they didn't post the SEC filing. What losers? See, look on the left side. There's no SEC filing. It's just whatever. Let me try the HTML. What is this? Press release. Okay, so here's a 12-pager. Inflation. There we go. Second. Hold on, let me put it over here. It's going to be a little easier if I do this 1 sec, because then I can write on it. There we go. Okay, so this is the Facebook press release. Okay. Why don't they release the SEC filing? Second, we will lap a period of strong demand in the prior year, and we are hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertiser budgets. Ooh, so they're blaming both Apple and the iOS changes, regulatory issues, and inflation over here at Facebook. That's not good. That's not good, because we don't expect that to get better. That's the problem, is it's not just next quarter. It's now Facebook's basically saying, hey, if inflation stays high, people are just going to advertise less with us. In other words, we're effed, is what they're saying. I mean, not really effed. They're still making money hand over fist. Don't get me wrong, right? But less people are now using Facebook because of, listen to this, increased competition for people's time and a shift of engagement within our apps towards videos like Reels, which monetize at lower rates. That's true. On even YouTube, the shorts are garbage in terms of monetization. But longer form content does better. The live streams actually don't do too well because, like, usually you don't get ads while you're watching it live. But it doesn't matter. I love doing the live streams. So, okay. How is Toast up? Is that a glitch? How is Toast up 5%? That can't be, because everything else is getting obliterated. Let me look really quick if there's any Toast news, because that don't make much sense. Toast. Okay, Toast is... No, it's just volume rising. Okay, yeah, there's no news on Toast. Okay, so looking at the actual sticks here, it looks like Facebook is, oh my gosh, $246, down 22.6%. Holy smokes. All of the recent gain. Oh my gosh, this is going to go so low. Right now, the order book is showing volumes at about 250. So it's going to go down to 250, which is going to put it over here at, okay, March of 2021 pricing. So you basically gave up a year of potential growth here on Facebook. Wow. In one freaking day. Oh, that's like PayPal. PayPal was the red hair, or the warning here. PayPal dropping even more. If you bought the dip on PayPal, it is now down. Oh my gosh, look at that. It's falling even more. Is that people are advertising less, then what does that mean? Less advertising, less people probably spending money. Oh my gosh, Matterport's down 8% in after hours? What? Hold on, did they report? MTTR. What the heck is happening? T-Mobile supposedly did well, but I thought their earnings were mixed. No, there's nothing on Matterport. But yeah, T-Mobile reported, in case you're wondering about T-Mobile. Yeah, T-Mobile's up 7.63%. I'm going to add them really quick here. There we go. So T-Mobile's up. Whoa, look at Amazon's accelerating decline here. Oh no. This is what I don't want. I don't want the economy to slow down. It's bad. You know, people are like, oh, Kevin, but you're not in the stocks. Why are you sad? Because it's bad for the economy. You know? Well, if you need a mental support group, I suppose you could always join metkevin.com/join. I think I'm going to change the back half of the URL to like mental help, because this sucks. Oh my gosh. Okay, let me keep seeing what the news is from the suits, because I mean this is insane. How does Trade Desk? Okay, Trade Desk is recovering. It was down as much as 10%, hitting a little bit of a bottom here at 61.50. So we finally hit a little bit of a bottom on some of this pain that just happened here. Qualcomm also bouncing. Okay, good. All right, so we're getting some bounces off of these crazy levels here. It just goes to show you, though, how insane this market is. Even Google's still down about 2%. It's back under $2,900, which is just nuts. And Qualcomm did really well, so they should not be negative. I don't know if they just went down because they're sad because of Facebook or something like that. I don't know. Visa's going down. Facebook's trying to recover. Facebook trying to hit a bottom here at 246. We got about 3 or 4 candlesticks up now. And then you've got, what else do you have here? Apple dropping about 0.61 on this. These earnings calls are going to be very interesting. Stay tuned for my video. If you have not watched my video this morning yet about the Google lie and the PayPal crash, you really got to watch that video. And I would just sit down, put it on 2x, listen to it, buy yourself YouTube Premium for $10, listen to it on 2x, and just go on a walk, okay? But like, you got to watch those. And then I'll do the same thing again if you like that for the earnings that we're going to get today. It's a lot of work, but I'll do it. Because I spend quite a bit of time on each of the companies. Okay, so are we bottoming here or no? Snap is down. How is Snap down 19.9%? Because Snap didn't. It's just because of Facebook. It's just sympathy. Snap didn't even report. Qualcomm talking about a 30% year-over-year increase in Q3 GAAP EPS. So now they're talking up longer term growth. So maybe that's why they're moving again a little bit. Still no news on Matterport. We have Spotify. The week forecast definitely hurt. We have Allstate. Okay, Allstate misses estimates. Allstate GAAP EPS comes in at consensus, but it does look like their adjusted EPS missed by about 2 cents. However, their sales beat. So they missed on the bottom line, but their sales beat. Okay, that's interesting. See, Allstate's going to be a really interesting company to research in terms of what they think about inflation pressures. Because, adjusted EPS comes in at a miss. Yeah, because they'll tell us about the housing and auto market a little bit, or they should. Maybe they won't. I mean, who knows? Sometimes these CEOs just talk about whatever the hell they want to talk about. But Snap, the only reason Snap would be going down is because of Facebook. And I know that sounds like a duh, but 20% on a sympathy fall? Like maybe if it's down 5% on sympathy, but that's insane. But that's also what's happening to Trade Desk and the other advertisers. And remember, folks, Google had great results, but they did not give us a forecast. They kind of lied. Well, it's not really. Well, I mean, watch my video on it. Whatever. Okay. Like, look at this. We're not even able to get Facebook can't even get it up anymore. I mean, it's now sitting at 22.7 down. This is terrible. Snap on pure sympathy is down 20%. Spotify, which missed earnings, is down 16%. Pinterest on sympathy is down 10.5. Trade Desk is stuck now at 9.3. Matterport didn't even report, and it's down 8.2. Twitter didn't report, it's down 7.7. Shopify didn't report, it's down 6%. Roblox is at $62.50. That's nuts. Etsy has been getting killed all freaking day long, and now it's even lower. I mean, what's Etsy at now? Etsy's at 132. It was down 9% on the day and another 4% in after hours. Affirm's back to $58. Arc is back to $70. Robinhood is almost at $13.37, which is a cool number in itself, but not where we want it to be. Smile Direct drops another 5%. Is Tesla being affected by this for the autos? SoFi's down 3%. DoorDash down. Tattooed Chef down. QuantumScape. I didn't even know QuantumScape was still on my list. $16. My goodness. Neo is somewhere over here. There's Neo. A couple, almost 3% to the downside. Google drops about 2%. I don't think Tesla's really getting hit, but I could be wrong by that. Let me see. Tesla. No, Tesla's down 1.4% on this. It's at 893. Yeah. And Enphase is down 2% on this. Look, a weak consumer. Anything that points to, let me put it this way. The absolute, Adam. Yeah. Anyway, the absolute worst thing that this economy could face, I don't care how much you think Tesla is amazing, which I agree, Tesla's amazing. The absolute worst thing that could happen to this economy is consumer spending declines because people finally say, F you, I ain't paying the prices. But inflation ends up still being high because of housing and rent, which has rent gotten any cheaper? And then the Fed is you know, in a rock and a hard place where we end up going into a paper recession. The Fed has to go ape on raising rates, and then they force us into a real recession. Okay, Meta finally recovering a little bit here. Good. I mean, what's a recovery when you're talking about 1% up on a 21 loss? Did PayPal go down even more? It did. Yeah. Okay. It's down about 2.9 right now, and Affirm's trying to bounce around and recover a little bit. But what garbage? Absolute garbage. Okay. Oh, this is gonna be such a terrible year. Okay, so we talked about Allstate. What did Allstate do though in the stock market? Let me see. Allstate. Well, I don't even know what their ticker is, honestly. Allstate. I really just want their earnings call. Oh, it's ALL. Oh, okay. Well, I guess that makes sense. ALL. Allstate. Ooh. Here's Allstate. 4.24% of the downside. Yeah, no kidding. SH9T, folks. SH9T. Jeez, man. Okay. How is Qualcomm? I don't understand how a company can tell you that they basically expect to make an extra $1 billion is down 4%. I don't get it. And it just sucks. Oh my gosh. Okay, still a little bit of a recovery here though. Facebook's almost up 2% now. So there's some buy the dipping happening here. I just still encourage you to be cautious about buying the dip on some things, depending on the macroeconomic cycle. But anyway, okay, let me see what else is going on with the suits. And BTC just took a little beater too, down to 36.7. It had a double drop here, tried to recover. You got to buy the dip right here, and then pulls down more. Dude, somebody's saying, did I miss Meta? Yeah, you missed Meta. Lucid's down another 2.28. Okay, let me look at the suits again. Oh man. All right, let me see what the suits are saying more broadly about this stuff. This is disappointing results from Facebook, follow Spotify, chip stocks are dropping even with Qualcomm's better than expected results. That's adding on to an earlier gap between some tech and semiconductor firms with blowout numbers amid specific circumstances and the rest of the market. Okay. No, there's not much over there. Let me go back to this other side. Okay, Qualcomm. Headwinds. We talked about those. Talked about, see, Matterport has nothing apparently, at least not yet. And Spotify we talked about. Snap we talked about. Allstate we talked about, and T-Mobile. T-Mobile, we've had our best growth year on service revenue and cash flow. Oh, well, good for you, T-Mobile. Okay, so, this is interesting. Facebook growth stalls as young users scroll elsewhere. Facebook says it's worried about Apple's new restrictions. Okay, we know that. Where's the young user part? We saw evidence of Facebook's worries about user decline among young people in documents shared with regulators by a former product manager. Oh, by whistleblower Francis. Oh, wow. Time spent for U.S. teens on Facebook is down 16% year over year. And young adults in the U.S. were also spending 5% less time on the social network. Facebook is now the second most actively traded company in the post market. Facebook's stalling in user growth is huge. The company has been facing a lot of competition, particularly for the younger demographic from other apps like Snapchat and TikTok. The decline was so worrisome that Facebook CEO Mark Zuckerberg said last quarter young adults would become the company's new North Star. Yeah, because they're leaving. I don't know about you. I don't use Facebook. I use Instagram, but I can't stand Facebook. I'm going to, Brazil raises benchmark lending rate. Oh my gosh. Brazil raises benchmark lending rate to 10.75% to combat inflation. Holy crap. Could you imagine if rates went to 10.75% in America? I mean, we're not Brazil, but still, that's insane. Do you use Facebook? Not including Instagram. I'm curious. We're going to run a poll. Yes. No. All right. We're running a poll. I know Facebook owns Instagram. I'm just curious because I know a lot more people use Instagram. If people actually still use Facebook. Okay. Let's see here. Okay. Spotify craters after subscription forecast falls. Qualcomm slides after push beyond smartphone chips hits snags. Yeah, because of the supply chain issues. Dude, this is garbage. Oh, jeez, man. I can't wait for the calls. The calls are about to start. I will go through the earnings transcripts and probably go have a beer because this is ridiculous. This is where people say circle the wagons. I mean, you are getting a tiny little bit of a bounce. Facebook's only down 20%, y'all. It's only down 20 now. Oh, God. Okay. Snap is down 19.4. They're really having a lot of resistance from you're not actually getting a lot of movement up here. I mean, this is good. Don't get me wrong, but these are nominal volumes. And volume between 70K and 110. The volume was between 150, probably about a 150K average after earnings. Yeah, 150 to 200. So volume's about 50% lower right now, and it's barely able to get it up. Snap, same thing. Volume declining, can't freaking move. 19.96%. Spotify down 12.39. This is better though. Okay, Spotify's recovering a little bit. So I don't know if they're saying something in the earnings call. Let me look really quick. Spotify. Q4 was the biggest quarter for new users ever. Okay, so the earnings call is starting with some optimism from the executives for Spotify. Okay, cool. Your forecast still sucks. Pinterest down 10.5%. Trade Desk still sitting down 9.3% and kind of rotating down more right now. Yeah, you could see that here. You tried to have a buy the dip recovery here, and it's still pulling down. Twitter has recovered a little bit as well. Oh my gosh. Roblox is falling, down now 6.8%. This is after hours. Oh. Roku down 4.4. Is Google still getting hit? Yeah, Google's recovering. That's good. And so is Qualcomm. Both of them, the anxiety is kind of leaving a little bit. We're getting a little bit of a recovery. Good. Let's see how's TSLA moving here. Tesla's still down about 1.62 in the after hours on this consumer fear here and the supply chain fear. I don't know if they actually provide any chips to Tesla, Qualcomm rather. If they provide any chips to Tesla, I don't think so. But T-Mobile's doing well, 8.73%. EXPI is at 27, slightly green. Not much green in the after hours, though. Not much. It looks like most of the pain is over us now, but that was disgusting. I mean, this is a bad set right here. I'm going to go through those earnings calls and we'll see what ends up happening with this, but that's not ideal. Somebody here says, I think you're jumping the gun. Facebook ads platform sucks with iOS update. Yeah. Now, in fairness, if you look up the Financial Times did a piece on this. Oh, there goes Bitcoin again. Oh, I'm on the 1 hour though. Hold on. Yeah, there we go. Okay, no, Bitcoin's stable. 36.8. Financial Times, Apple, iOS, Facebook, privacy, and what else do I want to put in? Maybe group data. Let me see if there it is. This article. Read this article right here. Apple reaches quiet truths over iPhone privacy changes. And in this, they actually talk about how, but 7 months later, companies including Snap and Facebook have been allowed to keep sharing user-level signals from iPhones as long as that data is anonymized and aggregated rather than tied to specific user profiles. So anyway, they just basically made this argument about how Apple was like killing these companies here, and how it seems like there might be an improvement in this cooperation between Apple, Facebook, and Snap. Now, keep in mind that this was posted, I think, early December. Yeah, December 8th. So, maybe these privacy rules didn't really start until December, and that's why the first 2 months of Q4 sucked. It's also not clear if this even mattered, if that did anything. So, I don't know. But yeah, I would read more into that if you were curious. Okay, now we're rotating back down. Are you serious? Like, come on. Just as we were recovering. By the way, according to the poll, I'm just going to end it here. 60% of you do not use Facebook and 40% of you do use Facebook. Oh, that's a lot more than I actually thought. Kevin, am I talking to a board here? Why are we not talking about supply chain and the trucker effects on the economy? Well, so I actually did. This morning, I reviewed the Robinson earnings call, specifically about North American surface transportation, trucks, and rail. And so you can watch that video. But yeah, I definitely talked about that. It's a very big deal. End of tax season. Consumers will be out of money. Yeah, no, you're absolutely right. I mean, I think a lot of people made money in 2021 and tax season's going to suck. Go on extension. Buy the dip. Anyway, well, hopefully that's when hopefully the dip ends at some point. But anywho, look at this. We're still rotating down here on Facebook, 21.6 now. So that recovery was false. Trade Desk almost back to that 10% decline here. Affirm's now over 5% down, and so is Roku. For some reason, Tattooed Chef is down 5%. I mean, this is or 4.16%. Like, why? I don't know. Maybe because they have to advertise to get people to buy their food because, I don't know, they have trouble getting recurring customers. I don't know. Enphase down 2.3. I will just say it. I've said this before bluntly. Like, I want TTCF to succeed, but just look up their ads. They suck. Like, at least the last ones they did like 6 months ago when I last looked at their ads, they were terrible with the tattoo annoying buzzing sound or whatever. Just look them up on YouTube. You'll see them. Tesla's down a full 2% now in after hours. It's getting worse in the after hours. Stop it. Not Beachbody. That's a penny stock. Also down 2%. Tesla's going right back to that 880 line. Oh man. Enphase is falling too. How about Arrival? That's been one of the runners. Oh, it's only down 2% as a momentum play. Not as bad. Pinterest lost all of its recovery here. We're at like mega lows again here on Pinterest. See, that's now the problem. Okay. See, this is a new, okay. Let's do this really quick. This is a new low for Pinterest. So if things stay this way tomorrow, this is going to be a new low for Pinterest. This is going to be Not a new low for Amazon. Amazon's going to go down to 2,900, but it's not as low as that 27 we briefly saw there. Tesla is not down at that 790, but still it's going down to 880. How about Facebook? Facebook, we said 250. That brings us back to the beginning of 2021. And Trade Desk at down 10% at 61.2 doesn't bring us down to May of 21 levels where we were at $46. And it also doesn't bring us down to that low where we saw $54. So we want to watch those bottoms. Like, I think it's a problem when we hit new bottoms. Disney is off of its low of 129. So is Enphase, so that's good. Cloudflare is dropping 3%, but also above its 75 low. Teladoc 246. Robinhood down 4% in after hours now, also off of its low though. So is Beyond Meat. So there's definitely some things that are off of their lows, which is good. Same thing with like ARC when it went down to 64, but still painful, especially when we're looking for like good news, not bad news. Snapchat down 17%. So Snap's going to be trading in after hours for $26. That's a new low for Snapchat. Yeah, this red candlestick right here for Snapchat. So Snapchat and pins are going to be at new lows, including Facebook if you go all the way back to the beginning of 2021. Neo's still above those new lows. Did Spotify, somebody says spot reversal? Really? Spotify. 5.6%. Oh, yeah, look at that on Spotify. Hold on, let's see what they said. They would have had to have said something in the earnings call. Wow, Spotify was down as much as 23%. Expect improvements on podcast margins. Stuart Lee to remove stand-up catalog from Spotify amid Joe Rogan misinformation controversy. We will one day serve 50 million creators. Implementing new measures to combat misinformation. Will test windowing on podcasts. All right, whatever. Whatever they're saying is creating some enthusiasm. But the wild swings, yeah, are just this is what happens when you get into more of a bear market. These insane overreactions. We'll see what happens tomorrow. I can't imagine the Joe Rogan outcry is anything more than a temporary speed bump. Like as if I was if I was long on Spotify, I wouldn't really care about it. I think that's part of a normal cycle for a social media platform. And it's really good to see that Spotify recovered that way, but Facebook is not. Facebook's still reamed over here at down 21.5%. Facebook's not getting any of that love. Neither is Snapchat, Pinterest, Trade Desk, Twitter, and Spotify's declining again. So I don't know if this is just like a temporary buy the dip, like somebody came in with big volume here, because look at that volume. See all this low volume right here? I mean, when the earnings came out, you had volume of 15 to 30,000, mostly around 20,000. And this all of a sudden was a 48,000 candlestick followed by 35. So somebody bought this and pumped it in the after hours here. Is Qualcomm recovering too? That would be good. Qualcomm deserves to. Okay, Qualcomm did so well. Yeah, good. Okay, it's only down 1.25%. That was ridiculous for it to have fallen like as much as it did. And Matterport still down about 7%. See, you see that manipulation right here? This is when you get like volume buyers that come in after hours when there's just really little, like the order books are really thin. If the order books are thin, you can move the price. It won't last long, but you can move the price. Oh, that's weird. Etsy did that too. Is this just I don't know, a little glitch or something? Anyway, whatever. That's crazy. I got some earnings calls to read. Thank you so much for being here. Make sure to sign up for the extra debit card by going to metkevin.com/extra. Sign up for the crypto trading platform FTX by going to metkevin.com/FTXUS. And we'll see you later. Bye.